Good afternoon, everyone. Welcome back to the commodities update video where we update you guys on natural gas, oil, gold, and silver, as well as the US dollar. We'll be looking at support and resistance levels to potentially play off of, as well as what's the most likely scenario price will be heading into later this week. And if you guys are looking for the stock market update video where I do QQQ and S&P 500, Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and meta-analysis, I'll be recording that video right after this one. So make sure to check that one out as well. All right, let's take a look at natural gas. So we had a huge gap up of close to 7% gap up, and then we went higher because we broke above a key resistance. So we broke out of this downtrending resistance as well as out of this tightening range. You can see this range where we have been tightening up, getting tighter and tighter. And finally, we back tested this uptrending support yesterday. You can see we have bouncing off here 6 times, more than that, roughly 8-ish times. So that was the range that we've been looking at for months. Is resistance and support down here. Again yesterday, good sign that we bounced off of it, because if we broke through that, that would have been a huge red flag. So let's zoom in to see what it looked like yesterday. Yeah, you can see the back tested once we bounced off of that. This is the 5-minute time frame, so we can see that it made a, once it hits that level, we made a 5-minute uptrend back to the bulls, and then they never looked back. So it was a very clear sign where bulls were wanting to buy and accumulate their positions, and they don't want it to break below that uptrending support, longer term support line. And today we had a huge gap up above this key resistance where we've been trying to get over, this 2.86 for many times. You can see all these times, even this time we got up, but the next day we came straight below it. Another time here, another time here. Same thing with this. We're up for one day, when we gap down below it the next day. We never had a real clear break where we ended up holding those levels. So we'll see if tomorrow we're coming back down here or not, because so far the record for natural gas above this level is 1 day. You can see this is also 1 day. So yeah, as long as bulls hold above 2.86, we should form a new zone around these levels. Obviously, it's not game over if we drop through here, because there's still levels of support below us. If we break through 2.86, come down to 2.79 or 2.8 at this level, and then bounce, yeah, it's still perfectly fine. No red flags or anything like that. But ideally, we want to hold above this level because it's a strong resistance, and we want it to act as strong support now. Let's zoom into the 5-minute time frame to take a look what happened today when we tested that level. So we gapped up, right? Makes sense. And then back tested it, and we bounced off of that. So that was a good sign. You back tested that 2.86 level, and we'll play defense and bounce off that. But it retraced quite a bit of it over to end of the day. So now we're pretty close to that striking distance again. I mean, bears just needs a 1%. We're back to 2.86. We have a clear new resistance over here, at least in the intraday. You can see that we cannot get over this quadruple top pretty much. 2.938 zone. Pretty much are these levels. So that's a clear intraday resistance. It's not a daily resistance as of yet. Unless we see another candle that comes up to here. You know, multiple days that we just can't get over that level, then we have a new clear level of resistance. But as of now, that was just the intraday resistance, and hourly trend will be our guide. So we have an hourly downtrend into that bottom key support zone, and now we have an hourly uptrend back to bulls' favor. So as long as bulls' hourly uptrend is intact, there is no red flags. So yeah, so we'll see if we can actually close 2 days above this 2.86 for once, and potentially form something along the lines of here. Otherwise, if we come down here, it's still not that big of a red flag for me, but I want to see us hold above 2.8. If we break below 2.8, then it's starting to look at a red flag, because you you can see this 2.8 level is where it's pretty much the top of this is chop zone, right? You have a couple of wicks above 2.8, obviously above this 2. These zones, but you can see there is more support at 2.8 than 2.6. So if we do break below that, now we're coming back to this sideways zone again for now we've been trading in circles for a very long time. So ideally, we're bulls that since we broke above it, we don't want to come back into that zone. So we want to hold 2.8. So we'll see if that happens or not. And we are in a daily neutral trend because we broke below that pivot on Thursday. So you can see this was a daily downtrend confirm into support. That means bears lack follow through straight into a neutral trend because we broke above the pivot. Now, if we do pull back, form a new pivot, and then break above today's high, that would be a daily uptrend confirm, but that would take at least another 2 days for that to even happen. So we'll have to see what the size of the retracement is going to be. That's going to be the most important, what I'm looking at for the size of the retracement. So ideally, 2.8 is where we want to retrace because that's still a bull flag. This is an A to B move. If we retrace to here, which is the 0.382 line, which means it's a 38.2% retracement of the initial move. So A to B move is 100% move. And we retrace 38.2% of that move. We're still in the bull flag territory if we just bounce off of here and chop around. And of course, if we break above today's high, that's a confirmed bull flag. So we'll see. Very key level 2.8 is where I want to see bulls hold. UNG, tradable ticker for Natgas. Sadly, it did not break above its resistance, even though natural gas had a big gap up, and we're still in this falling wedge resistance and this bottom support. Over here 5 times, rejected from here 5 times as well. We're just in the middle of that range. We still can't get over above 6.78. That is the level of the middle ground zone. You can see this level, how many times we have rejected from there, how many times we have bounced off of it from there, from the top. That's a very key zone. So now we're still below it. So it means we're still rejecting it from it. And we'll see if we can finally close above it soon. Let's see. Let's take a look at the hourly charts. So from yesterday, we have an hourly uptrend confirmed and hourly uptrend still intact. So bulls still have hope. And because hourly pivot is over here, so hourly uptrend is still intact. Meaning if we bounce off of here tomorrow, ideally above this low, this candle's low is 6.66, and then we want to continue our hourly uptrend. There is so see that 200 moving average, this yellow looking line on the hourly time frame is currently acting as strong resistance. So over here, resistance, rejection, act as support because we're above it. Resistance, 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 resistance. So that is the near-term resistance that we will all be looking at since it's on the hourly time frame, meaning that's the shorter the time frame, the faster things can change. So in the short-term trades, you'll be looking at this key 200-day moving average resistance on the hourly time frame. See if we can get over or not. If we get over that, we're probably going to come down up to test this downtrending falling wedge resistance, which is close to probably 6.9-ish. Yeah, $6.98, $7 range. See if bulls can continue to hold their hourly uptrend. Let's say we come up to here and then reject from that 200-day moving average again. The IL line comes down, breaks that pivot. Then we have an hourly downtrend confirmed. Then that's a bad sign. Right now we still have an hourly uptrend, and we're still in striking distance for that 200-day moving average. So we may test this yellow line again and get above. And because this 200-day moving average resistance also coincides with this 6.78 resistance on the daily, you can see this 6.78 resistance, and it'll be a little bit harder to get over because there's more confluence of signals in one area. The more that you have in one area, the more chances of that probability of that happening increases. So if you have like 5 resistance in this one area, the chances of it rejecting from it is going to be very, very high. Where same thing as with supports. If you have 5 supports in one area, chances of it bouncing will be very, very high. And we just have a couple here. We have, I would say 3. 2 to 3 is in that zone, so we have to get over that. All right, let's take a look at oil. I'm on the weekly, so let me go to daily. No signs of red flags from the bulls, and we're testing pretty much top of this range resistance. At this 83.34 level is this zone, so the bottom of this top. And daily uptrend still intact. Let's see here. This is one initial move for me. Yeah. So daily uptrend still intact. No signs of red flags from the bulls if daily uptrend continues to be intact. Although we are having a little bit of a divergence on the RSI, meaning you can see right here, RSI was at 80.19. You can look at this down here at 80.19, and we made a new high on the price, and now it's at RSI is lower at 76.5. Isn't that low? Let's see. Let me take a look. It looks like it's still over 80. Okay, no, 76.5. So that means the divergence, meaning the RSI is lower than the prior RSI while the price is higher. So that means a negative divergence. So that may potentially, it doesn't mean that if there's a negative divergence, we're going to roll over. It just means that it just puts a little bit of pressure as it goes higher and higher, because we have this negative divergence. That makes sense, because if the RSI, how do I say it? Because it makes it, the momentum is slowing down while the price is going higher. If you have a price at higher levels while the momentum is slowing down, then that means it's going to be putting more pressure on the buyers. And as it goes up higher, it's going to be less and less buyers, less and less momentum. So that means a reversal could be coming soon. Yeah. Obviously, not all negative divergence happens. It just shows if one is a sign that potentially there may be a temporary top coming. So we zoom into the hourly charts, and as long as hourly time frame is intact, the bulls, no signs of red flags. We didn't even get a clear hourly downtrend during that drop over here. This was hourly downtrend during the pre-markets, but this is just no volume. I want to see an hourly downtrend during market hours, and with a clear follow through, we would just chop around sideways. No clear hourly trend here. And bull just takes back over and confirm its hourly uptrend. So no signs of slowdown yet at this moment. Not even on the shorter term time frames. We don't even have a 5-minute downtrend. So yeah, so no bears on oil at this very given moment, other than one negative divergence in RSI, but nobody trades just off of that. You want a multiple of confluence of signals potentially to place a trade. All right, take a look at gold. All right, gold rolled over today because the dollar just kept on going higher and higher and higher, and there's no signs of slowing down yet. Still, as long as the dollar uptrend's intact, we don't, just still going. So we're looking back down here, 1869 for gold is probably not going to come down to here. This downtrending support is quite a bit far away. But you never know. If the dollar just keeps ripping, maybe we will come down there. But still, we still have this 1869 to hold before that happens. So we will see. And it does look like we have another one in support here. Let's see. Yep. So if that holds, then we won't be coming down here. So you can see support, support, and support, and support. So this line is pretty valid for me as well for supports. See if the bulls can show up tomorrow or the dollar can weaken a little bit. Otherwise, honestly, it's take a look at the dollar. No signs of slowdown yet, but let's take a look at see if there's any strong resistance above us. Let's go to the daily charts. Okay, zoom in here. Do we have any strong resistance at today's high? Let's take a look. Today's high. Yeah, we do actually. So we can see all these levels here are resistance. And a couple one here that was acting as support when the price is above it. So it makes sense for there to have some form of resistance, but it doesn't mean it's the end all be all resistance. If we break that, we'll still come up to this level too. See, this level actually has more resistance than the one below it. So these are the two levels I will be looking at. If dollar breaks above today's high, 106.71, we're very likely coming down to this 107.2 level. We're starting to get a little bit climaxy here. So we get another like big 90-degree up candles. The more 90-degree it looks like, the more climax top it is starting to get. But no signs of slowdown at this given moment. Hourly trend still super intact. Hourly uptrend intact. Bounce up for this 12 EMA again. And we barely retraced. So we don't have any red flags yet. Yeah. See lower wick. If we come back up here, double top, rejects, form an hourly downtrend here, then that's a good sign that this could be a temporary top for the dollar. But as of now, dollar still absolute in full bull control. Silver, let's see if silver dropped off the cliff or not, like gold. Yep, similar to gold. And let me delete this real quick, but it's pretty much the bigger picture we're looking at. No changes yet. Downtrending resistance rejected here 5 times. Sideways support, big triangle, bounce off of it 4 times. So pretty much we are there again at this triangle bottom support. And we'll see if it comes down a little bit lower, still has some room, and it can bounce out here or not. If it comes down here, it can be potentially a good add because if the dollar forms that hourly downtrend at that level where I just showed you guys, then silver would be potentially a good add here for just a temporary bounce. And you can sell it in between here and here, which is the mean of the top range and bottom range, because usually it reverts to the mean. Doesn't mean we're going to go all the way up here again to test this level, but chances of it going to the mean is a lot higher than us going back here. So we may potentially scalp trade in for a couple percent, but dollar needs to definitely weaken first, where nothing's gonna. This could just straight blow through it if the dollar goes up another couple legs up, right? But if the dollar goes up a couple legs and this bounces, then that becomes a relative strength, and that may potentially go even higher if the dollar weakens. All right, that's a call for you guys. Feel free to subscribe, like, and share if you guys made it this far, and feel free to comment below if you guys have any questions. And feel free to join the memberships. I do membership videos on Sunday, and yeah, feel free to support the channel. And make sure to take a look at the stock market of the video, where I will be recording right after this one, of all the 7 mega cap tech stocks, as well as QQ and S&P 500. I'll see you guys tomorrow. Have a great rest of you guys' day.